I think slowly the members will be joining. We are live on YouTube, sir, also, and on Zoom platform also. So I welcome our honorable guest speaker, very prominent chartered accountant, my elder brother, CA Parveen Kumar ji, who is contributing like anything for the cause of the profession, for the cause of the members. So on behalf of the Institute of Chartered Accountants of India, we are really grateful to CA Parveen Kumar ji, our honorable guest speaker, that in spite of his very hectic schedule, because he is a very prominent chartered accountant, is heading a very prominent chartered accountant firm. So it's very difficult for him to spare time for all of us. But as I am his Anuj, so on my special request, he has acceded to my request. So I'm really grateful, really indebted. And we are having Nitin ji. I'm not in a position to view Nitin ji on the screen as of now. And Narendra Roja ji, our Deputy Convenor, Jawahar Park CP Study Circle. So, Parveen ji, with your permission, can we observe 2 minutes silence? हमारे चार्टर्ड अकाउंटेंट्स और उन परिवार के सदस्य जो कोरोना पैंडेमिक की वजह से आज हमारे मध्य नहीं हैं, उन दिवंगत आत्माओं की शांति के लिए 2 मिनट के लिए परमपिता परमात्मा से प्रार्थना करेंगे और उसके बाद विधिवत विल स्टार्ट द प्रोग्राम. आई वेलकम नितिन गुप्ता जी आल्सो. Om Shanti Shanti Shanti. So I once again welcome CA Parveen Kumar sir and CA Nitin Gupta ji on behalf of the Institute of Chartered Accountants of India and all our honorable viewers who are with us from each and every part of the country, from on Zoom platform as well as on YouTube. So without taking further time, may I request CA Narendra Roja ji to please start the proceedings.
Thank you, Anuj ji. On behalf of Jawahar Park CP Study Circle, I welcome our today's speakers, Sri Parveen Kumar ji, very senior chartered accountant, as well as Nitin Gupta ji, so young and dynamic chartered accountant. On the subject matter is our CARO. And I welcome, I especially welcome Sri Anuj Goyal ji, who is a sitting Central Council member, and he has served 14 years as a council member at Central, and he also served as a regional council member for 3 years and 6 years as a branch head. He also contributed immensely in various capacities. Presently, he is the chairman of the research committee, the oldest committee of ICAI on capital market and investors protection committee of ICAI. He is also vice chairman of corporate law and corporate governance committee with exemplary academics. He possesses CA, CS, CMA, ICWA, LLB, MCOM, DISA and DIRM. I request Anuj Goyal ji kindly say few words to the members. I also welcome all the members and participants. Over to Anuj Goyal ji.
Thank you very much, Narendra Roja ji, for your nice words and starting this event by your nice words. And I'm really happy that Jawahar Park CP Study Circle is so active in each and every affairs of the institute. Every topic you are trying to see that how we can reach to the members in the best possible way. So I'm really very happy that we are having CA Parveen Kumar sir, very prominent chartered accountant, is contributing like anything. He is the ocean of knowledge, I will say. And I welcome CA Nitin Gupta ji also on this very important VCM of the Institute of Chartered Accountants of India on latest developments in CARO. And friends, I hope that everyone is safe and sound and keeping up with good health. As rightly remarked, knowledge will bring you the opportunity to make a difference. On a similar line, I truly believe that knowledge is the sure short way to enrich one's intellect, which can open up the doors of opportunities, be it in personal or professional life. I would like to appreciate the efforts of Jawahar Park CP Study Circle to organize this VCM on this very, very important topic for the profession, latest development in companies, auditors, and report order, CARO. Friends, being part of the elite community of chartered accountants, we are very well aware that an statutory auditor is required to issue audit report in form of Companies Auditors Report Order CARO under Companies Act to enhance the overall quality of reporting by the company auditors. Earlier, the reporting requirements were governed by CARO 2016, but with the introduction of Indian accounting standards and other similar developments which were happening over the period of time, a strong need was felt to overhaul and restructure entire CARO 2016 to bring it in line with the said major changes. Keeping that in mind, the Ministry of Corporate Affairs had announced a new format of statutory audit of companies and notified CARO 2020 on 25th February 2022, entirely replace erstwhile CARO 2016. And friends, the major change being addition of 5 new clauses in CARO 2020. As earlier, there were 16 clauses and now there are 21 clauses. The new clauses which are introduced involves reporting with regard to important aspects such as details regarding incurrence of cash losses, details regarding cases of resignation of the statutory auditors, details pertaining to aging and expected dates of realization of financial assets and payment of financial liabilities based on financial ratios, details regarding transfer of unspent amount to a fund under CSR provisions, and details regarding qualifications or adverse remarks in the consolidated financial statement by the auditors in previous CARO reports. Apart from the addition of 5 new clauses, few of the sub-clauses were added which were present in CARO 2016 with an aim to achieve detailed and comprehensive reporting by statutory auditors. So through today's very, very important VCM, our aim would be to dive deep into the understanding the latest developments in CARO and their respective impact in reporting requirements of statutory auditors. Now, without taking a further time, as we are very, very eager to listen our guest speaker, none other than CA Parveen Kumar ji and CA Nitin Gupta ji. I once again welcome on behalf of the Institute of Chartered Accountants of India and on behalf of the Jawahar Park CP Study Circle, our honorable guest speakers, Parveen ji and Nitin ji. And of course, we are having the leaders from Jawahar Park, Narendra Ojha ji, Shyam Agrawal ji, and our founder, Rakesh Varshney ji. And I welcome all our honorable members who are with us on Zoom platform as well as on YouTube. So I once again welcome all of you on behalf of the Institute of Chartered Accountants of India. And over to CA Narendra Ojha. Thank you very much, friends.
नरेंद्र जी आप म्यूट पे हैं.
Thank you, Anuj ji. Few words about new CARO as well as Parveen Kumar ji, CA Nitin Gupta ji. I request Parveen Kumar ji kindly start with your deliberations on today's topic relating to the CARO. Parveen Kumar ji.
Thank you so much. Thank you, Anuj ji. It's always a wonderful opportunity to interact with you and share dais with you. You have been flag bearer of our community of chartered accountants, and thank you so much for putting in all your efforts and hard work. I remember we have been traveling so much together, and it's really an honor to be with you on this dais. I'm also thankful to Narendra Ojha ji for giving this opportunity. This Jawahar Park Study Circle, we have been hearing very good things about this study circle. They have been always organizing events on the contemporary topics. And this particular topic of CARO is really, really very, very important, as Anuj ji also mentioned. When I was speaking to someone that, we are preparing on CARO, one of my friends said, but this CARO is applicable from, the audit reports which are going to be signed on 22 April. But then I said that, my friend, we need to prepare for this in this year, in the current year itself. So it is very critical that all of us understand what this CARO is bringing in on the table. So the way we have prepared the presentation, I'll give you an overview of this CARO, and I will share a couple of clauses which are very, critical. And then I will be having my executive partner, Mr. Nitin Gupta, who will take you through clause by clause with what all changes had happened in the CARO. So our objective is that all of you, our friends who are doing audits and who have to issue CARO reports in the next year, you should apprise your clients that you will need certain data, you will need certain information, and they need to prepare that information right now. Like, just to give you an example, that quarterly statements which you are going to give to the bank, because your client might have taken cash credit limit, or whatever statement you are submitting to the bank, they should be reconciling with your books of accounts. This has to come in CARO. So if you do not educate your client now that whatever quarterly statements they are going to submit to the bank on June quarter and so on and so forth, while making the CARO report, it will become a challenge for you on how to mention that there was a reconciliation issues. Similarly, the ratios will be required, previous year data will be required. So you will need to really prepare yourself, and you really need to educate your clients that this CARO is bringing in a lot of new requirements. And we will go through clause by clause on that requirement. So Nitin, can you please put up the presentation? So basically, including this slide, so there are 50 slides, but I hope that we will be able to finish our presentation in next 1.5 hours or so that we will have some time for question and answer session also. So go to the next slide. So the background is that CARO is not something new. I remember in way back when I was doing my CA, I was appearing for CA final paper, and it was a Companies Act paper of the final. So when I reached the examination hall, there were some friends who were flipping around the books. There are some students who are always very, very studious. And that friend of mine clearly, very softly said that, have you prepared for MAU-CARO? At that time, MAU-CARO was there, and I was dumbstruck. I had no clue what this MAU-CARO is all about. So what I'm trying to say is that this CARO concept is not new. It has been there since ages. And previously, as Anuj also mentioned, that there was, this company's auditor's report order was issued in 2016. And after this, Ind AS has come, and after, there have been requirements from the regulators as well as from the stakeholders. This new CARO order was brought in for 2020. This was supposed to be applied earlier, but then they gave 1-year extension. And now it will be applicable for all the audits, which will be financial statement, which will be starting on or after April 1, 2019. So that means if your client is having December ending as a financial year, so please remember that financial statements for the year beginning after April 1, 2019. So this has changed to April 1, 2021. So whatever financial statements are being prepared, if they are beginning after April 21, then only this CARO will be applicable. So basically, this power to bring in such kind of order comes to the central government under subsection 11 of section 143. So this, section clearly says that central government may consult with NAFRA by general or special order, can specify the order that the auditor's report shall include. So basically, what is required is, you as auditors will need to report as required in this CARO. So basically, it will be applicable for all the financial statements which are beginning on April 1, 2021. So go to the next slide. So this applicability, there is no change, but I will mention it for all of you. This will be applicable to all companies, and sometimes people ask that whether it will be applicable for the foreign companies also. So it is applicable on the foreign companies also, except the following. These companies, like for example, banking company, insurance company, one-person company, Section 8 company, and small company. On these companies, this CARO will not be applicable. So when you are doing an audit and when you are issuing your audit report, you will not be required to report under CARO for these companies. There are some exemptions to the private limited companies also. Basically, these private limited companies should not be a subsidiary or holding of a public company. So these private limited companies should have a turnover of less than 1 crore, less than 10 crore. So I'll go the way it has been written on the slide. So number one, the paid up capital and reserve and surplus should be less than 1 crore as on the date of balance sheet. So I will be sharing some case studies with you to give you an example of how this less than 1 crore is to be calculated. And then the borrowing should be less than 1 crore from any banks or financial institution. Important point is that your balance sheet is showing less than 1 crore, but during the year, if the borrowing which you have taken, let us say the client has taken a limit, cash credit limit. So during the year, if this limit had crossed 1 crore, then this exemption will not be applicable. So you need to be very careful. Although the requirement is on the balance sheet date, but for the purpose of borrowing less than 1 crore from any bank or financial institution should be at any point of time during the financial year. And also the total revenue, including revenue from discontinued operation, should be less than 10 crore if you want to avail this exemption. So basically, all these conditions are required in case you do not want to report on CARO. What is important is that even if one condition is not met, you will need to report in CARO. So I repeat, number one, paid up capital and reserve and surplus should be less than 1 crore as on balance sheet date. Number two, the borrowings should be less than 1 crore from the banks or financial institution at any point of the time during the financial year. Third, the revenue, including revenue from discontinuing operation, should be less than 10 crore. If all these are met, then you do not need to report on CARO. I will be sharing some examples and case studies to explain the point that if your turnover is particular amount which is less than 10 crore plus there is some other income also, then there might be some challenge for you. So go to the next slide. So basically what you need to be careful about is that this applicability of reporting under CARO is on the balance sheet date. So friends, this is basically the auditors community which needs to be bothered about CARO. They need to put in their comments, or they need to answer questions which are given in this order. So it specifically provides that it shall not apply to the auditor's report of consolidated financial statement. So there is one clause which my friend and partner Nitin will be sharing, clause 21 of paragraph 3. But other than that, this CARO will not be applied to consolidated financial statement. So this particular clause is saying that in case you are doing a consolidation and in case there is any qualification in the reports, audit reports of the subsidiaries, then you will need to consider that while preparing your audit report. So there are certain important points which you need to be careful about. So this is this order, the requirement of this order, they are supplemental to the existing provisions of Section 143 of the Act. And the Institute of Chartered Accountants on 1st of July last year, they had issued a guidance note on CARO 2020. So this is providing guidance related to reporting requirements. Guidance note, as you are all aware, is a guidance given by the institute. But the auditors will need to exercise their professional judgment and experience on various matters, because guidance note are in shape of guidance to the auditors. Go to the next slide. So like Anuj ji had also mentioned, basically there are 21 clauses which are there in the new CARO, and you will need to, you as auditor will need to report on 50 assertions. Previously there were only 21 assertions which were in 16 clauses. Now you will need to make 50 assertions, and many changes and many revisions have happened. So this table is giving you a gist of what all changes have happened. So I'll just share it with you. The new reporting requirements, there are 28 new requirements. They are included in sub clauses, and all those have been, if you count line by line. So there are 28 new items on which you will need to report. Then there are some clauses or sub clauses which have undergone a change. So there are 16 of those which have undergone a change. 7 clauses are there where there are no modifications. They have been incorporated as it is from the previous CARO. And one reporting requirement has been deleted from the 2016 CARO. So total 50 assertions. So when you are preparing your client for audit of the next year, you need to educate them right now that there are certain clauses which will attract immediate attention, and you need to prepare your you need to train your staff also. In case you are doing quarterly audits, then you need to be much more careful. And in case your client has taken some facility from the bank and they are submitting some data to the bank, they need to reconcile with the books of accounts, and you will need to report in CARO in the next year. Go to the next slide. So there are some examples, which I wanted to share with you. Let us say this company XYZ Limited, as on balance sheet date, it has a paid up capital of 80 lakh rupees. It has got a revaluation reserve of 10 lakh rupees. It has got 11 lakh rupees as capital reserve. So total comes to around more than 1 crore rupee. But they also have a debit balance of P&L, which is INR 2 lakhs. So if you adjust your P&L debit balance, the amount will fall below the CARO limit. So somebody was asking a question whether you need to consider debit balance of P&L account for the CARO reporting or not. So what is your position? What will you say on this? So will the auditor of XYZ Limited report on CARO 2020? So the answer, Vidya Bhartiya has said that no, it is not required. Simply because when you calculate total of capital and reserve and surplus, your profit and loss account debit balance has to be taken into consideration. Abhinav Kumar has also said no, it will not be required. So thank you so much for your quick response. And I think what we are sharing with all of you is making sense. So go to the next knowledge check, Nitin. Yeah. So there is a extract from profit and loss account of ABC Private Limited. And when you are looking at the financial statement, the revenue from operation is 9.7 crore and other income is 45 lakh rupees. So total amount of revenue, it comes to 10.15 crore. So as auditor of ABC Limited, will you be reporting on CARO or not? So that is an important, interesting question. So what is your response on this? Maybe we can wait for 2 minutes and wait for these people. So Abhinav Kumar said it is not required. But when you look at the definition, yes, Vishwanath said yes. And Ram Samaria said no, not required. Abhishek said not required. But when you, Rachna Jain said yes. And Himanshu Agarwal said yes as per schedule 3, and Rakesh Ranjan has also said yes. So I think you guys have got it right. When you read the schedule 3, your revenue includes revenue from operation as well as other income. So your total revenue is above that threshold limit. So you will need to report on ABC Limited, for CARO reporting. So you will need to give your CARO reporting. So now what we do is go to the next slide, Nitin. So there are certain requirements. We will go line by line item, and I'll ask Nitin to start discussing these line items, and then I'll be there, and then when 319 will come, I'll take the lead, and then I'll share those thoughts with you. Over to you, Nitin.
Thank you, Parveen ji. And first of all, thank you very much for nominating me. And thank you, the study circle, Jawahar Park Study Circle, for allowing me to share my knowledge along with Parveen ji. So, having understood the overview and the limits, now let's go on clause by clause. Our endeavor is to talk about all the clauses, irrespective whether there has been change or not change. But the clause which require more deliberation, either they are complex in nature and where the subjectivity is involved. So we'll go into further detail. Other clause will just give a overview. So we'll start with this very important clause on the inventory and working capital facility. So this has been new clause added. What it talks about that in case the company has obtained a sanction working capital limit in excess of 5 crore from bank or financial institution on the basis of security of current asset. So this gives the applicability of this clause. If this is the case, then all the quarterly returns or statements which are filed by the company with such bank or financial institution. So as an auditor, they need to give a comment whether those quarterly return or statement are in agreement with the books of accounts. If not, then give the details. So here, we all know what it means by working capital of a company. It includes the liquidity level for managing day-to-day expense, and it covers inventory, cash, accounts payable. And then the loan can be in form of a credit facility, like cash credit, working capital loan, bill discounting, factoring, etc. And here in the clause, it's talking about the sanction limit. So if the sanction limit is more than 5 crore, this clause would be applicable. It doesn't mean like how much is the utilization. Utilization may be less than the sanction limit. Fine. And this sanction can include the fresh loan like sanction during the year, as well as if the limits are continuing from the previous period. Then, if these conditions are satisfied and that loan is taken on the basis of security of current assets, then as an auditor, what need to be done? The first step would be obtain a list of statement of returns which are submitted to the bank. This should be on a quarterly basis. Compare with the books of accounts as of that quarter end. If it's accurate, like corresponding to the books of accounts. If not, then the reporting would be applicable. Now the question comes, what kind of statements or return? So only those statements which are quantitative in nature, which comes out from the books of accounts, those should be need to be examined. Any kind of qualitative statement which has no relevance with the books of accounts will be ignored. And then there is a misconception that whether as an auditor they need to audit this statement or return. I would say no. The requirement would be fulfilled if it agrees with the books of accounts. That's it. And then if say as a part of the loan agreement, company is required to submit monthly statements. But then the reporting would be applicable only in the case of quarter end. And here you can see if the company has given the statements for April, May, and June, but as an auditor, they need to verify the June month return only, or for the quarter end. Then comes if the auditor finds the difference between what amount is shown in the return vis-a-vis the books of account, there the materiality will play a role, and one need to inquire the nature of the relevance of the discrepancy. Then accordingly the reporting will be made. So this is one of the very important change, and we thought to bring it at the beginning, so it's not in the sequence of the order, the CARO. And all the small and medium companies, one can understand that many times the statement, especially the mid-quarter statements which are being filed, historically they never, I would say, may not like match with the books of accounts. So now through this reporting, it will be taken care.
So
and the next,
just wait. There is a question because this is a very important clause. Just go one slide backward. There is a question from Abhinav Kumar that this is between the bank and the company. How the auditor have access to such reports? So Abhinav, this is very critical point. There is a responsibility of an auditor. So when as auditor you will be making a report, you have to specifically mention that we have sought and obtained the required information from the client in order to reach to your opinion. And this you will need to ask from the client what reports you are submitting to the bank. Please remember that this is one of the critical issue which has been raised by the regulators and which has been coming in the limelight, that clients, the borrowers who are taking facilities from bank, they give whatever XYZ numbers to the bank for requirement of the quarterly reporting or the monthly reporting and the stock statements. And many times the bankers, they go and tell the client or the borrower that please get these stock statements stamped and signed from your chartered accountants. And the auditors, sometimes they put a stamp and initial and give it to them. You need to be extremely careful in this year. So you need to seek, you need to ask for it, that what report you are submitting to the bank. And then you will need to understand that this is the requirement under the company's auditor report order 2020. There is a requirement for auditor to mention and to report whether these statements which have been submitted to the bank, whether they are in agreement with books of accounts or not. So if you are not able to have access to that data or that documents, you need to specifically mention in your report that you are not able to comment on this clause in absence of data which is not being provided to you. So be very careful, because this is a critical clause, which has very thoughtfully come into the requirement of CARO. So you need to seek, you need to ask for it. And two, if they do not provide you this information, you need to mention in your report, CARO report, that you are unable to comment whether these reports which have been submitted to the banks or financial institution, whether they are in agreement with the books of accounts or not. So this is very, very critical requirement. So we picked up two points basically. One was this, because I, being right now, we have grown up a little bit and we have 700 people with 26 partners and 8 offices in India. But we started our practice with one-man show, as a proprietor around 30 years back. And I exactly am aware what kind of requirements the client will bring on table for you. So it becomes a very challenging task for the auditor to, advise the client on the right side. And ultimately now the responsibility will be on the auditor. So whether your client is submitting incorrect data or not, you have to see, and as per this order you have to report. And please remember, this report is going to go all the places. It will be like once your audit report is approved by the shareholders, it has to be submitted to MCA. And nowadays, you also remember that for listed companies, there are NAFRA, which is doing the quality audit review, quality reviews. For non-listed companies, that means if you are doing audit of a private company, please remember that there is a quality review which can happen from the Quality Assurance Board also. So QRB is now looking into the technical reviews of the private limited companies. So you have to be very, very careful. You cannot take it lightly. So you have to ask the question, which all statements you have submitted, your client has submitted to the bank or the financial institution. Why I am saying again and again, many people say, may come and say that, okay, I have taken a facility, but it is not a bank, it is NBFC. So even if it is NBFC, you will need to, this will be applicable on any financial institution. So you need to be careful. Whatever information you are submitting, this information need to be in agreement with your books of accounts, with the client's books of accounts. So the second clause, Nitin, you can share, and then I will mention about it.
Just to add on the previous, like the discussion which we are doing right now, in terms of this working capital, this documents. So it is one of the important audit procedure is to test the completeness of the data which is being provided by the client. So in the given case, it would be important to go back to the sanction letter, look at which all statements or returns which are required to be submitted to the bank and which are mentioned in the sanction letter, and then cross-check whether the client has provided all those information or not. So in that way, one can check the completeness of the data, not mere relying on the auditee as to what data they are providing. Now, coming to the next clause, this is again, we have picked from between, but one of the most important new amendment in the CARO 2020. It talks about the reporting on financial position. So you can read this bare literature. So on the basis of financial ratios, aging, and other information, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report, that the company is capable of meeting its liabilities existing at the date of balance sheet, as and when they fall due within a period of 1 year from the balance sheet. There are a lot of here and there. So let's try to decode this particular clause. So you can see the highlighted portion have been in a bold font. So auditor need to comment whether there is a material uncertainty exist or not as on the date of audit report, that company is capable in meeting its liabilities existing at balance sheet date. So they need to go back to the balance sheet date, liabilities, and which liabilities which fall due within a period of 1 year from the balance sheet. And how to test this? So the requirement, they have given this parameters, like on the basis of financial ratios, agings, the date of realization of financial assets and financial liabilities, plus other information. I mean, in case of private limited company, its other information includes the director's report. So based on this information, the auditor need to comment. Now, if we look at from the sequence of what should be the ideal audit procedure, so obtain the details of liabilities existing at balance sheet date for which the auditors is doing the audit. So that would be say March 31st, 2022, the first time when this CARO would be applicable. So obtain the list of all the liabilities and along with its due date. From those, bifurcate which are due more than 1 year and which are less than 1 year. So pick all those liabilities which are falling due within 1 year. Then go back to the nearer to the audit report date and check the subsequent payment of those liabilities. Whatever liabilities has been paid, keep those aside. All the remaining liabilities which has not been paid nearer to the audit report. Then compare with the position of realizable financial asset as on that date. Now those financial assets realizable. So if you look at the guidance note, they have given enough guidance on any item which is reported as a current asset in the financial statement by the corresponding accounting standard. It is expected that those are already at a realizable value. One need to do the mathematics as to how much is the subsequent liability which remains unpaid and compare with the realizable financial asset as on that day. And if the answer comes negative, then basically the reporting gets attracted. So this is how this would be applicable. And then guidance note also suggests that the language should be in a negative assurance way. All of you, I am sure we know that what is meaning by negative assurance. So auditor need to state that based on the procedures performed, nothing has come to their notice which would believe them that there exists a material uncertainty. The answer should be in a negative, through a negative assurance. That's what the guidance note talk about. And then there is also interplay between the going concern and this particular clause. Because if you look at the SA 570 on going concern, it also talk about the material uncertainty. That is at a more at a macro level. Here talks about the liability existing at balance sheet date, like that. But say for this clause, the auditor has reported by giving a negative assurance that there exists a material uncertainty. So it gives an implication for SA 570 also. So more or less in those situations, there will be a material uncertainty in concern also. So if you look at SA 570, that's a altogether a different way in which the auditor need to perform. But we are trying to connect this two because both ultimately reaching to the same conclusion. So this is one of the things where it requires the subsequent event transaction testing also, because it talks about nearer to the audit report. There can be a lot of challenge in getting this data from the client. So there requires the skill set of the auditors and seeking the right information and then applying the test through their own professional skills based on this parameters which is defined in the CARO. Parveen, you want to add anything?
Nitin, there is a question from Sunil, whether we have to collect documents with bank seal signed or given from our clients without acknowledgement of bank. So, Sunil ji, we will need to, so I think this relates to the previous clause, but I think while doing your audits, you will need to, apply your professional skepticism. So once you are collecting data from the client, and if you have received data on the email, and you can, prove that it has come from the genuine source, then it is fine, good for your working papers. Otherwise, it is always better to take, the data from the client and also take management representation that whatever data has been provided to you, the same data has been given to the bank. Please remember that there is a difference between investigation and doing the statutory audit. So when you are doing a statutory audit, you will need to apply your professional skepticism, and you will need to you will need to reach to your opinion whether your report is giving true and fair view. And what you are seeking from the client, that is very critical. You mentioned to the client that you need data which they have submitted to the bank. So if bank has not given acknowledgement, you can always ask why they have not given acknowledgement. And if the bank has, given the acknowledgement, then it is fine. Now coming to this particular clause, reporting on financial position, go back one slide, Nitin, so that we can.
Sir, एक question छोटा सा बीच में.
Yes.
Interrupt कर रहा हूँ आपको. Sometimes if the client is not providing information like statement or other things provided to the bank, we are generally writing to the bank directly. Since banks ask our status, sometimes they ask whether you have sent this balance sheet or not. We are also asking to the bank what the statement are being provided by the client, your customer, kindly provide us, as well as along with the balances. Like in case of Satyam, if you remember this, the bank balances was not matching with the balance sheet. FDRs in the balance sheet was not with the bank. In that case, we can write directly to the bank to kindly provide this such information. I have written some letters to the bank and they are providing.
Very true, sir. So there are audit procedures for getting your opinion. So you can always, it's a very valid point, sir. Thank you so much, Narendra ji, for picking it up. You can always write to the banker to ask for, the statements which the management has provided. But because in that particular case, the balance sheet was showing an amount, you need to have very strong audit procedure to confirm whether that amount was deposited in the bank or not. So that is why when the auditor did not approach the bank and relied on the confirmation, balance confirmation, which was given by the client to the auditor, and client has done some fudging on the document.
Yes,
the auditor was found guilty of negligence.
Yes.
Because they were supposed to go to the bank and apply, should have gone for the third-party verification by themselves. And if you remember, after that episode which has happened with Satyam, all the auditors, they woke up and started giving a direct confirmation. Earlier, they used to feel comfortable if management would have provided them the balance confirmation.
Yes.
Nowadays, it is much more rigorous because nowadays there are, some digital mode of confirmation has also come, like for example, confirmation.com. So you directly write a mail to the bank with a copy to the client, and bank will directly reply to you on the email. There's an automated system which, interact with them. Then there are also online banking facilities there. So a bank can give you the view rights or can ask you to sit with them, and then, you can see the bank balance. So there are a lot of other alternate procedures are also there. But as required by the auditing standards, the bank balance and, the third-party verification is part of compulsory audit procedures. But very valid point you have taken, sir. I think if it is okay, the auditor can always go to the bank, but bank will give you the detail only after it has been approved by the client. Bank will never give you directly, because even if you write a balance confirmation letter, your client has to sign off that okay, I authorize. So these are my auditors. Please give your direct bank confirmation to them. So the client will have to be taken into confidence. And if the client is ready and giving, his concurrence, then only the bank will give you the data. So, but thank you so much for, bringing up this point. Now, this 319 clause. So if somebody asks you that in the new CARO, what is the new thing? One thing you tell me what has changed. I think this is the clause. You have to read it very carefully on the basis of financial ratios. So the auditor will need to make an audit work paper in which financial ratios are calculated. So some of the auditors may say that, okay, put these ratios in the financial statement themselves, put them into notes to accounts. So aging, this will be, in the work paper of the auditors. So this is the basis of your opinion. Financial ratios, aging, expected dates of realization of financial assets. Your work paper should have a line item of fixed financial assets and what is the expected date of realization and what is the expected date of payment of financial liabilities. Other information, which is, like Nitin mentioned, the director's report or the annual report or any other document which is, being attached. So other information accompanying the financial statement, the auditor's knowledge of the board of directors and management plan. You will need to have in your work paper the management plans, the director's plan. So you will need to see the minutes book. You will need to see the director's board minutes and the management plan. They may not have gone to the board of directors, but there may be management plans. So you will need to ask for management for their internal MIS. And then you will need to reach to opinion as auditor that no material uncertainty exists. Whether the material certainty exists or no material uncertainty exists. When you're signing the audit report. So you are signing the audit report, let us say in the month of August, you will need to see the financial liabilities of March 31st, whether they will be paid by the next March, and you are reporting on whatever date you are reporting. On that date, what is the situation? Between April and August, in case there is a fire happened, or in case there is a disaster happen, or in case there is something serious happen, you are aware that company will not be in a position to meet the liabilities. You will need to report accordingly. So there are various standards which are coming into play when you are reporting on this 319. So trust me, 319 is the most difficult clause when you are going to report in the CARO in the next year. So you will need to see whether material uncertainty exists or not. And your work papers will need to demonstrate that you have reached to your opinion on the basis of some working. It's not that I had taken a calculator and I have calculated and I understood that they can meet it. No. It is not going to be like that. Your work paper need to be there in your file. Financial assets, date of expected realization, aging, financial ratios, they should all be there in your work papers. And then how did you reach to your opinion that there is no material uncertainty on the date of your signing of the balance sheet? And company is capable of meeting its liabilities existing on the date of balance sheet. Liabilities which are existing on the balance sheet date, not the liabilities which have come after the balance sheet date. So in case there is a case going on in the court of law and the decision has happened between 31st March and your signing date, that liability does not exist on 31st March. So you need to be careful. So many standards, whether you are reporting under Ind AS, whether you are reporting under AS, or whether any other framework, you need to be careful that your CARO reporting require you to give an opinion. So one is your audit opinion, whether the balance sheet and profit and loss account, they are showing true and fair picture. That is one opinion which you are giving in the main financial statements. But here also in CARO, there is an opinion which you have to give, whether there is a uncertainty about the liabilities, whether they will be able to meet the liabilities in next 1 year or not. So there may be a situation that there are debtors which are going to be recovered after 2 years, or the fixed assets which are going to be completed after 2 years, but they are pledged. So those financial assets will not be in a position to meet the liabilities. So please remember that this clause will be under the radar of quality assurance, quality reviews. So your work papers need to be very, very tight. So your audit work paper file, you need to be very, very tight. So this clause is very critical, 319. So if somebody says, today was a seminar of Jawahar, this study circle, what was one learning? So you can always go back and say that I need to go and read 319 because this reporting is a very, very critical one. So go to the next slide, Nitin.
सर बीच में डिस्टर्ब करूंगा सर छोटे छोटे डिस्टर्बेंस रहेगा
या प्लीज सर
सर इसमें एक छोटा सा क्वेश्चन रेज होता है टर्म लोन लिया हुआ है क्लाइंट ने सपोज और रेवेन्यू जो है उस कंपनी में उतना नहीं आता डायरेक्टर्स अपने अनसिक्योर्ड लोन से उसको पे करते रहते हैं टर्म लोन को तो इस सिचुएशन में जो रिमार्किंग होगी वो तो नेगेटिव रहेगी ना
सो आपको ये देखना है कि द फाइनेंशियल लायबिलिटीज
एक साल का
आर गोइंग टू बी रिकवर्ड इन नेक्स्ट 1 year
नहीं होगा वो अपनी पॉकेट
टर्म लोन इज ऑलवेज फॉर मोर देन जनरली इट इज मोर देन 1 year. So financial liabilities, whether within next 1 year, you will come to know whether they will be able to meet those liabilities or not. Financial
director को consider करना है if they are giving undertaking.
So by the time you will sign off your audit report, sir, because you will be dealing with the private companies, by that time almost 1 quarter would have gone. You could have seen that directors have already given loan and repaid that term loan. So you will need to see whether these financial liability which are left for next 3 quarters, whether your financial assets which are already there, whether these assets will be able to meet up or not. So if directors have to give the loan, they have given loan before your audit report date or not. Okay. You understand? So this is a very tricky point which we have picked up and very practical also. Many private companies, they will have this challenge, but you need to be very, very careful about. So I think Himanshu Agarwal has said a very important point. He said that parent support letter and review of financial projection will also work to comment in this clause. This is a question. So basically what we do is when we are doing audit of, let's say, a foreign subsidiary company, and there is an issue about going concern, standard on auditing 570. So we say that, we have to make an opinion, whether the financial statements have been made properly. One of the basic assumption, in the framework is that financial statements are prepared on the going concern basis. So we have to challenge that assumption. And when we say that, okay, there is a heavy loss and, it is very difficult to survive, how the management has taken this assumption on going concern that this company will go on. At that time, the company says, okay, here is a letter, support letter from my parent, which says that in case of difficulty, we will fund this company. And management has taken a conscious call that the financial statements are being prepared on a going concern basis. Now, in order to meet that requirement, that okay, management has fine, so for the subsidiary, the holding company, they are financially very good, and there is a commitment which has come from them. The auditor can take that letter as a supporting evidence in their audit work paper file and say that, okay, I agree. In my opinion, the company is preparing their financial on going concern basis, and they have got some basis for it. So, my audit procedures are good. I can understand that they are fine with going concern. But Himanshu, this clause is very, very specific. This is very, very specific. It is asking, and I read again, on the basis of financial ratios, on the basis of aging, on the basis of expected date of realization of assets and payment of financial liabilities and other information. So whether the auditor is of the opinion that no material uncertainty exists This is something different from going concern. The company may remain, working as a going concern, but they may have a challenge in meeting those financial liability within next 1 year. So we need to keep all these aspects in mind, that whether that next 1 year is critical or not. And I think a lot of challenges will be there for the auditors to reach to this conclusion on the basis of whatever requirement. So this when we were so the institute prepared this guidance note. They created a lot of study groups, and we were debating on this particular clause. Trust me, there were a lot of members in that study group. So we were trying to find ways how to put things in the guidance note. So there's a lot of debate which has happened, and I would recommend that take this clause very, very seriously. Read the guidance note and create your work papers, so that whatever you have opinion, you given as your opinion, should be in line with your work papers. Yeah, so I hope that answers your question. So maybe we can go to the next clause now.
And just to add on the Himanshu's point related to support letter, during the course of audit, like in terms of this going concern as per SA 570, and this clause also, this support letter always play in one of the important evidence. So one should not restrict just in getting the support letter through the client. One should validate the support letter also. What it means is that one should see whether the parent company, the holding company who is giving the support, whether they are in position financially to support or not. It should not be just mere paper exercise, like they're just giving a statement. So one need to validate, and there is no harm. I would say it is recommended that auditor obtain a support letter independently from the parent company. So as an auditor of the component, they can write an request letter to the parent company to provide the support directly to them. This will give a more comfort and more better way of getting the audit. That will take care of both of this 570 also and this particular clause.
So there are a couple of questions. So Mr. Atmaram Saria has asked whether 319 is applicable without any threshold. So I think the thresholds which are there for CARO, so those thresholds are there, but 319 there are no specific things. Then Rahul has asked this question: during the current situation, the debts may become irrecoverable. From what we will report in such uncertainty. So your audit procedures will define whether the debtors have become unrecoverable or not. So maybe because of COVID situation, between the balance sheet date and your audit report, if the people from where you have your client has to recover money, that client, that debtor has already gone, closed their operation. So, so you will need to take that into consideration and then realize that what is your opinion, whether the company will be in a position or not in a position. So Yash has asked, but this can be an indication specified under SA 570. I think Nitin has already discussed about interplay of 570. So you have to be very, very careful about. So Sandeep Bhatnagarji has a question. In case of a company which has witnessed fall in sales and incurred huge losses in the period under audit, the management undertake that they have good orders in hand and will be able to recover the losses. What should be the auditor's stand vis-a-vis going concern? So Sandeep ji, thank you so much for being there, in this presentation. We are so glad that you are also here. Your question is very, very pertinent, and basically it goes in a direction of SA 570. The auditor will really need to see whatever the assertion of the management or the assumption of the management is, whether you agree with them or not. So going concern will be a serious issue in COVID time. So if your client is, let us say, real estate sector or the finance sector or hotel or hospitality sector, you need to be extra careful. So it's not that, like Nitin said, that just by whatever the management has provided, whether you just rely on that, you have to use your professional skepticism also. Yeah. So Nitin, go ahead with the next clause.
Now we'll follow the sequence. We'll go from right from beginning to the end, clause by clause. So these two clause we thought to deliberate at the beginning. Now allow us to go one by one. So the first clause, like para 3, clause 1. Clause 1 talks about property, plant, equipment, PPE, as we all know, and intangible assets. It has 5 sub clause. Few of them are modified or few of them are newly inserted. So let's deliberate on this first particular clause on PPE and intangible. So this is the bare literature. You can all of you can read just, and then we'll discuss it further. Yeah. So you can see that the terminology has been changed from in CARO 2016, it was written fixed assets. Now they have brought the word PE. Not a big deal to discuss. We all know this is to align with the Ind AS and with the AS10 also. The revised AS10, it also refer the word PE. The important thing is it also include intangible asset. You can see, you could have seen in the second subclause. So they have incorporated intangible asset also, apart from the PPE. Then the question comes, which all PPE should be considered for this data, like for this clause. So the guidance note clarifies that if the company is under Ind AS regime and they have investment property or non-current asset held for sale, those items also need to be considered here for this particular clause. Now the requirement is basically whether the company is maintaining proper records. What do you mean by records? So the CARO per se or the Companies Act or the accounting standard, they have not defined what should be included in the record. Record here, as a layman person, we correlate with the fixed asset register. Now it will be PPE register and so. So this fixed asset register, we are hearing this word right from our like articleship days in ages. So in a typically fixed asset register, one will have the data, historical data, like the vendor name, invoice number, date of invoice, date of capitalization, and then it also include the location of the fixed asset, then quantity, and then the numerical aspects like the original cost, then the depreciation for the year, and then the WDV as at the reporting. So this basically prepared on an Excel spreadsheet, and in case of a company which is having the ERP, so that data should come out from the ERP source database. So as an auditor, they need to examine this fixed asset register and need to report whether the company is maintaining proper record or not. So the most important, the procedures will start once after like getting the FAR from the client, the auditee. Then that checking part will start. One would be to reconcile the numbers with the trial balance and with the draft financial statement, and then see what all data is there. If the minimum required data is not there, then the reporting will get attracted here. In a case where PPE register is not maintained by the company, we would say it's a serious documentation issue and control lapse, because especially for those companies where the auditor need to report on IFCFR also, there it will have a dual impact, the IFCFR also. So again, this is relatively like same which was there in the earlier CARO. In terms of the intangible asset, it includes the intangible assets also. So intangible assets can be self-generated or purchased from outside. Those relevant data should be there in the register, which will give information to the reader of the intangible asset. Then comes the second clause regarding the fixed asset. Regarding the fixed assets physical value. So again, the guidance note specifies that it includes the right of use assets which are under Ind AS 116, those lease, I would say lease properties items. And then it also includes the investment property and non-current asset held for sale. So it's a bigger dimension. Then comes it is whose responsibility to carry out the physical verification. It's the company's, it's the management's responsibility. It's not the responsibility of the. And then auditor need to comment whether verification happens at a reasonable interval. Now, what is reasonable interval? It depends upon circumstances and case to case. It depends upon how many units and how many like factories or locations where the assets are situated, nature of the business, whether they are in a trading concern or they are in manufacturing. So this would determine the reasonable. And then the question also comes whether it is necessary for the management to physically verify all assets on an annual basis. Then what should be the auditor's reporting requirement? So here, in case of a bigger company where they have diversified fixed assets located across locations, so nowhere it is necessary that all the fixed assets need to be verified annually. It all depends upon what kind of policy or procedure they have laid down. Can be fine if, say, for example, they have a policy of getting all the assets verified in a phased manner over a period of, say, 3 years, whereby some of the assets are verified on an annual basis, like year on year. So it should be cyclic in nature, such that each category of asset will get an equal chance of being verified over a period of 3 years. So those can be kind of policy which company can draft. And again, if they have under IFCFR, so those needs to be documented as a part of their process flow. And then as an auditor, one need to comment on this. Now the second question comes, what if there is a discrepancy in doing the physical verification, whether that is material or not? So here the auditor has to use his professional judgment. There is no threshold limit as given in case of inventory, which we will look at the subsequent slide. So here it talks only about the material discrepancy. So it leaves to the professional judgment of the auditor. And then most important, if there is a material discrepancy, the auditor need to comment whether those has been properly dealt in the books. So if the accounting treatment is being given and auditor is comfortable with that, the reporting would be will follow accordingly. Fine. Yeah.
There are a couple of questions, Nitin. So one is Abhinav has asked whether as statutory auditors, whether they can rely on internal auditor for physical verification of PPE. I think we will be talking about internal auditor responsibility of statutory auditor related to internal audit reports. We will discuss it in a short while from now. That is one of the requirement of the new CARO. Then Abhinav has also asked about the industrial land allotted by RICO, Rajasthan on 99-year lease on which the company have loan and install building their own. So whether this lease land falls in PPE or to be shown separately. I think you will need to understand the agreement and the data. You will need to read a lot of documentation around it, and then only you need to take a call. Rakesh Madan has asked a question in COVID situation, how the comments on the verification of inventory and PPE to be drafted since physical verification wasn't possible. A sample draft to be provided by ICAI. So Rakesh ji, I think what Nitin has just shared with you, what is responsibility of auditor is not to actually, compulsorily do the physical verification. They have to see whether physical verification is being done by the management or not at regular intervals, reasonable intervals. Then there is a question from Mr. BL Malviya from Jodhpur. Thank you so much, sir, for joining us from Jodhpur. Their question is, as per section 177, subsection 9 of the Companies Act 2013, companies are required to have vigil mechanism My question is that whether it is suffice to obtain management representation by the auditors not to consider whistleblower complaints. So, sir, whenever there is a whistleblower complaint or whenever there is a complaint which comes to the auditors, they will need to, so there are various factors on which the statutory auditor will need to consider how significant it is and how important that is in the part of their audit procedures. And, they will need to take into consideration whether, it will be, again, a judgment of the auditor, whether they will need to have a look at the financial statements or whether they will need to go more deep into it, or they will need to have some kind of alternate audit procedures. So lot will be dependent on the kind of complaint or the kind of whistleblower letter which they have received. So thank you so much for making this session a very lively and very interactive session. Nitin, we can go to the next point.
Now, the next clause is related to immovable properties. Talks about whether the title deeds of all immovable properties. There is an exception to lease agreements. So whether the title deeds of all immovable properties disclosed in financial statement are held in the name of company. If not, provide the details as per the format given. Now, this is a modified clause from the previous CARO 2016. What has changed dramatically is this particular format. If you compare this clause with the earlier one, they just stop like provide the detail, but what details? The CARO 2016 was silent, and here comes the the criticality, and this is the data which no company where the title deeds are not held in the name of the company, they would like to give this disclosure. But as an auditor, this is a factual reporting. One need to give that like reporting in case the title deeds are not held in the name of the company. So here, what it talks about, that if the title deeds are held in the name of promoter, director, their relative, so the specific disclosure will come. It excludes the lease properties. But if there are discrepancy in lease agreement or it's not duly executed, it shall be prudent to include those cases in this particular table as well. This is given in the guidance note. There can be some peculiar situation which we can discuss. Like what if the property, immovable property has been mortgaged, so the title deed will be with the bank. So in that case, as an auditor, they can seek the confirmation from the bank and financial institution, and whereby if they get a reply, then it will meet the requirement. The second case would be, what if the title deeds are lost accidentally and company, they don't have any evidence to support. Then as an auditor, they can inquire more and obtain the FIR copies. Through that, they can get a comfort. If they are unable to draw the conclusion, then the reporting can be made. And what if title deed is not transferred due to on account of any dispute? So that data also can be mentioned in the table. The reporting will come. So this cannot be a justification not to report. And few days before, we were discussing with one of the finance controller of a company, and they told us that it's fine that if you give a detail, but please don't disclose that it is held in the name of the director. So we were deliberating whether that requirement is there in CARO 2020 or it's there in CARO 2016. But then somehow they manage, for this FY21, CARO 2016 is applicable. So there won't be any issue, but they acknowledge this fact, and in the current date, they will get the title deeds registered in the name of the company. The question can come that it's a case study, like the office building is being used by ABC and it's capitalized in its books. The said office building got transferred in the company's name only in the month of March.
एक छोटा सा क्वेश्चन.
हाँ जी, please.
अभी पेक्युलर सिचुएशन जो अभी था आपका फर्स्ट वाला लास्ट सीट पीपीटी में, इसमें आपने कंफर्मेशन फ्रॉम द फाइनेंशियल इंस्टीट्यूशन के लिए बोला है आपने. इफ द चार्ज इज रजिस्टर्ड विद द आरओसी, that will be suffice for documentation purpose. Hello.
How it will give comfort that title deeds are held in the name of company or not? तो चार्जेस से ये पता चलेगा कि कंपनी ने एक अपना जो इमूवेबल प्रॉपर्टी है वो चार्ज किया हुआ है.
Okay.
So there may be a situation कि still title deeds are not held in the name of director or in the name of shareholder. But still कंपनी ने उसको चार्ज कराया हुआ है. So that may not be a conclusive evidence.
Right.
ये सिचुएशन हो सकती है. यहाँ in this given case study, one can see that title deed was transferred only in the month of March. What it means that as at balance sheet date, the title deed was in the name of the company. Whether this reporting would be made under this clause or not. So if you read the language, it doesn't talk about the balance sheet date. Since throughout the year, the title deed was not in the name of the company, the reporting will be there. In the remark column, the auditor mentioned that in the particular month, the title deed got made in the name of the. Right? Then the next clause is related to revaluation. So you can read this their literature. So whenever there is a revaluation being done, so the accounting literature, AS10 or Ind AS 16, they talks a lot about revaluation, when to do, and on which class of like whether it can be done on a single item within the plant and machinery or it need to be done on the entire class. So that accounting aspect, it is expected that companies already has taken care of that accounting literature, and as we would do the audit of financial statement also, so that part would be taken care while doing the financial statement. Particularly for this clause, it talks about in case where the revaluation is being done, whether the revaluation is done by the registered valuer or not. Now, it's a very interesting thing. If you look at the accounting standard, it does not mandate to get the valuation done by a registered valuer. If you look at the Companies Act also, different sections, there also it's an accounting adjustment, revaluation. But by the virtue of this CARO clause, the auditor need to comment whether the valuation was done by a registered valuer. And there is a section 247 which talks about a lot on the registered valuer. So if the company has done the revaluation from an consultant, from an like professional who is not registered as a registered valuer, so the comment will come. Then it's for the company how they will justify to anyone for this particular. Fine. Then it also talks about if the revaluation is more than 10%, so that disclosure would be required. So again, it's a mathematical calculation. I don't foresee any challenge in this, but the important part is related to this registered value of this particular clause. Moving next, this is the fifth clause under this particular category, property, plant, equipment. Talks about the Benami property. Read this. So specify that if there is a Benami property held by the company, then whether appropriate disclosure is being made in the financial statement or not. And what the disclosure should include, it gives this requirement: nature of property, carrying value, status of proceeding, and then whether it would would require a disclosure as a contingent liability or a provision is required to be made. So there comes the accounting literature behind this whole concept. But as an auditor reporting on CARO clause, if there is an Benami property, then one need to see whether disclosure has been made on. The second aspect would be what if the proceeding are initiated post balance sheet date, but before the signing of audit report, then it will fall within the subsequent event, and SA 560 will come into play, and then in more of the cases, this reporting would be required even if it's being initiated post balance. What do you mean by Benami property? So there is a separate act, the Benami property. It basically, in a layman language, it talks about if the property is exchanged in a fictitious name. So that's one of the like inclusive definition of Benami property. Yeah, one can go through the guidance note to look at the more in depth about the what is included in the Benami. Then we move to the next category, inventory and working capital. So again, it's a carry forward clause from the CARO 26 with the change which is being written with a white font, white color. I mean, yeah. So whether physical verification has been conducted at reasonable interval, and in the opinion of auditor, whether the coverage and procedure of such verification is appropriate. Then, in case the discrepancy is more than 10% in aggregate of each class of inventory, whether those has been properly dealt in the books of accounts. So it's a like two different clause. So let first concentrate on the physical verification aspect. Again, it's the responsibility of the management to plan and conduct the physical verification. In terms of SA 501, I would mean that anyways, it's one of the well-recognized audit procedure that auditor need to present at the year-end inventory count and satisfy themselves with the physical verification exercise which is being performed. And that is one of the important audit procedure, test the existence of inventory. So as the auditor who do the financial statement audit also, so that procedure anyways should have been taken care at the year-end date. Now, when it comes to reporting under this clause, auditor need to see whether the plan of the inventory physical verification is it's appropriate or not. It's appropriate. It's a matter of professional judgment. Could be based on the location of the like inventory, nature of inventory, and so. And about the reasonable interval also, it can be on a quarterly basis. It can be on an annual basis also, once in a year. All depend upon the nature of the inventory and the business in which the company is dealing. And then once the auditor is ensured, satisfied themselves about the appropriateness and adequacy of the inventory, then comes the difference between the physical inventory and what is being shown in the books of accounts. If the difference is more than 10%, and here the 10% should be determined for each class of inventory. Class of inventory, it means RM, raw material to be dealt separately, finished goods separately, work in progress. So within each class of inventory, if the difference is more than 10% based on value, not based on quantity, fine. In that case, whether the like what is the treatment being made by the company, whether the impact has been taken in the books of accounts or not, that auditor need to comment. Now moving to the next clause, it's related to investment guarantee. And again, I would say here there are 6 sub-clause. This is also one of the important change, the entire related to loan and investment. And it talks about in case company has given the loan or investments, made the investment or given guarantee for other companies. So one can read the first subclause, and it's divided into 2 parts. applies to all loans and advances in the nature of loan. If you look at the CARO 2016, that was talking related to loans given to the related parties. And here it covers all type of loan and advances, whether those loans are long-term or short-term, and whether those are secured, unsecured. So if company has given any loan or advance in the nature of loan, so here the reporting requirement, then auditor need to report like there are loans, so they need to bifurcate between how much loan is towards the promoters and related parties defined under Companies Act, and how much is to the other than related party. And the disclosure need to be given as to how much is the year-end balance, how much was the loan given during the year. This entire clause, it talks about the loan given during the year. That's the important part. It doesn't talk about the carry forward loan. So any loan given during the year, then the calculation will come. This particular clause is more on a facts base, so don't foresee any challenge behind this mathematical calculation. Moving to the next clause, clause B, C, and D, what is written over here. So if you look at the clause, like subclause B, states that whether the investment made or guarantee provided, the terms and condition of the grant of all loans are not prejudicial to the company's interest. This is more of an opinion-based requirement. Auditor need to determine whether the terms and condition for which the loan was given, whether that is not prejudicial to the interest of the company. So here, what can be the standard audit procedure? Auditor need to examine the terms and condition. The terms and condition would mean what's the rate of interest, what's the security, how much is the repayment term. So those will determine the terms and condition of the loan given. And then what's the business rationale behind giving the loan, and whether the company is in position to give loan or not. It should not happen that there is a cash crunch, there is a working capital shrinkage, and on the other end, company is giving loan to either to related parties or to like non-related parties. So if that is the case, then it can be prejudicial to the interest of the companies. Interest of the company, it means the shareholders. So this clause is particularly for a bigger company. And if auditor consider that the particular terms and condition on which the loan is given is prejudicial to the interest of the company, then the reporting will get attracted. Here it talks about all the loan, whether that is being carried forward from the previous year or given in the current. The next clause is related to in respect of loan and advance in the nature of loan, whether the schedule of repayment of principal and payment of interest has been stipulated, and whether the repayment or receipts of interest regular. So again, it's more of a fact-based requirement. The problem will come where the loan is given without a repayment schedule. In that case, the reporting will be made that no repayment schedule is stipulated, and if repayment schedule is there, then the auditor need to examine whether the repayment of principal and interest regular or not. If not, then the reporting will be made here. Again, please pay attention that it covers all loan, irrespective whether it is made to whom. Then moving to the next clause, it talks about if amount is overdue, that means it is not being recovered. Take the amount of, hello?
Yeah, Nitin, you can continue. There was some disturbance in the background, but I think you need to go a little fast because we've got only 15 minutes left.
So if the amount is overdue and more than 90 days, then what reasonable step company has taken for recovery of principal and interest? So it's more of a opinion based. Reasonable step does not mean only legal step. So there can be steps other than legal way. one need to see the correspondence with the party and what kind of documentation the client is having. Based on that, the auditor can frame an opinion whether reasonable step is being taken or not. This is the important clause. It talks about the evergreening of loan. So read the requirement. It talks about if there is a loan, existing loan, and to overcome the default, company has given the fresh loan to the same party, or they have renewed the loan. In that case, this clause gets attracted, and then the reporting will be made. How much is the renewal and how much is the percentage of that loan to the entire loan outstanding at year end. With this way, the reader will come to know that company has done such and such thing, which otherwise would be difficult to find out. And here comes what if the renewal or extension has been made post balance sheet. The guidance note suggests that even if the renewal or extension is made post balance sheet date, this clause will get attracted. It's a factual reporting if this condition are satisfied. Then the last clause within this category is whether the company has granted any loan either repayable on demand or without specifying any term of period of repayment. If so, specify the agreement aggregate amount and percentage thereof. So this is again a mathematical calculation, and here important part is how much is given as a percentage to the promoters or related parties. So the question comes, when to establish that relationship. The guidance note suggests if that relationship is any time during the year, so this particular bifurcation will get applicable. The further clause is in respect of whether provision of section 185 and 186 of Companies Act have been compiled or provide the detail. So there is an entire separate, I would say, literature behind section 185 and 186. One can go through those sections of Companies Act. As an auditor, they need to see whether this sections has been made complied by the audit by the company or not. If not, then the disclosure would be required to be given. It also talk about the indirect lending. You can see the example. So in an indirect way also this section 185, 186 get. Maintenance of cost record. It's an carry forward clause from the previous 2020 like 16 and earlier CARO also. Not much challenge over here. Only thing is that section 148 stipulates which all companies are required to maintain cost record. If your audit, your company doesn't get attracted in that section, so reporting will be made as if like company is not required to maintain cost record. And auditor is not supposed to do the detailed examination. Their responsibility is restricted whether such accounts and records have been made and maintained. This clause is related to stat dues. Again, is same clause which is there from the earlier one. So the first clause is related to undisputed dues, whether company is regular or irregular. So one need to report on the regularity in terms of the whether the repayment is being made on time or not. And then if there is any stat dues outstanding more than 6 months from the date, like as on the balance sheet date, from the day they became payable, that is the case, then the auditor need to comment the amount and the nature of it. Again, it's a factual reporting, so one should not look at the materiality. And if there comes the situation, then the auditor need to. Second subclause is related to the disputed dues. So if any disputed dues is not paid on account of dispute, is not deposited on account of dispute, then the reporting requirement will be made in a particular format which is given in the literature. And you can see that in terms of disputed dues, whether company has made a provision in books or not, that's a different thing. That accounting aspect will taken care. Here the reporting is more on a fact base. So if there is a dispute where company has not deposited the amount, now irrespective of whether provision has been made or a disclosure as a contingent liability, this particular disclosure will be there in the CARO audit. Then comes the earlier we have seen in case where the company has given the loan. Now comes the clauses where company has taken the loan, or like borrowings. Again, there are many sub clauses in this, and all are interconnected with each other. The first one is related to default, whether there has been a default in repayment of loan or in payment of interest. So this interest related thing was not there in the earlier CARO. Here it covers interest also. If yes, then the period of default and other requirement, which is you can see over here. So here it covers any lender. So it is not necessary that borrowings need to be like only to be reported where it is taken from a bank or financial institution. Even if the loan is borrowed from a parent company or from any other company, like it can be any lender. So you can see it covers any lender, and whether it covered default committed during the year only or continuing from previous year. So it covers all kind of default, whether it's in the current year or it's from the previous
एक
year.
क्वेश्चन
हाँ जी,
प्रवीण जी, नितिन जी, एक इससे रिलेटेड क्वेश्चन है. सपोज एक कार का ईएमआई है और वो बाउंस हो जाता है, नेक्स्ट मंथ में ड्यू डेट पे बाउंस हो गया, नेक्स्ट मंथ में उसको प्रेजेंट करके पास हो गया, डिफॉल्ट तो हो गया. क्या इसको रिपोर्ट करना होता है? मटेरियल तो नहीं है, डिफॉल्ट है, इस कैटेगरी में डिफॉल्ट है. इसकी जो लैंग्वेज है पूरा वो, इसमें ये तो पता लग रहा है कि डिफॉल्ट हो गया, ड्यू डेट पर पेमेंट नहीं हुआ.
सर इसमें ये रिपोर्टिंग आ जाएगी. इसमें ये हो सकता है कि रिमार्क कॉलम में अगर एज ए कंपनी वो इंसिस्ट करते हैं तो रिमार्क कॉलम में ये मेंशन हो सकता है कि द सेम हैज बीन पेड सब्सिक्वेंट इन द कमिंग मंथ. अब ये डिपेंड करता है कि अगर उस कंपनी में सिर्फ व्हीकल लोन, कार लोन ही है तो वो अपने आप में वो मटेरियल हो गया, तो डेफिनेटली फिर रिपोर्टिंग आएगी.
अगर एक भी ईएमआई बाउंस हो जाती है तो वो यहाँ पर रिपोर्टिंग होना चाहिए.
हाँ,
ठीक है.
Then the next clause is whether the company is a declared willful defaulter. If yes, then give the details. So what is willful default? It's been defined by the RBI in its master circular. In layman language इसका मीनिंग ये होता है कि जानबूझ के अगर डिफॉल्ट किया है willful by the company तो वो willful default में आता है. And now the important part would be from an auditor perspective, how to cross check. अगर कोई कंपनी सामने से आके बोल रही है, if they suo moto they say कि yes we are willful defaulter, then तो ऑडिटर का बहुत सिंपल रोल है यहाँ पे. बट अगर कंपनी एक्नॉलेज नहीं कर रही, so this is the way in which the guidance note has suggested. They can seek a like through an independent inquiry with the bank, and in the balance confirmation letter they can also include this particular requirement. They can ask from the bank whether the company is a willful defaulter or not, and auditor can also obtain the CIBIL report of the company, which will ideally that should like specify whether the company is a willful defaulter or not. If auditor come across this situation, then the reporting will be there. The default can be any time during the year. The next clause is related to term loan, whether term loan were applied for the purpose for which it was obtained. If not, the amount of loan so diverted and the purpose for which used. So the concluding part is more important. Like auditor need to also mention the amount of diversion and the purpose for which it was used. This is also one of the important clause where the company has taken any fund from any entity or person to meet the obligation of its subsidiaries, associate or joint venture, then the reporting would get attracted in this clause. Now, as an auditor, how they need to cross-check this? So normally this clause will get applicable where company has taken loan at a one side. They have also given loan or made further investment in subsidiaries, associates, joint venture. That is the case, then more or less this clause gets attracted. Here the question comes to meet the obligation. What is defined under obligation? A lot of literature is given in the guidance note. Obligation means it can be direct obligation, settlement of obligation directly by the company, or it can be making payment to the subsidiary, and then subsidiary is using that money to meet their obligation. If that relationship is established, then the auditor need to give a comment to this clause. This we can skip, please, considering that time. Yeah. Next one is related to fraud. It's an expansion of the earlier clause. We can cover the first clause, subclause A and like C, being written A over here, but it's C subclause. So if you look at the subclause A, the scope is widened as compared to CARO 20. In the CARO 2016, it was restricted to any fraud on or by the company through officers or employees. But here in this CARO 2020, they have removed the word officer or employees. So it means it covers all kind of. This clause per se doesn't mandate the auditor to discover fraud. It means, if you see the wordings, important part is notice or reported. So if any fraud is being noticed or reported during the year, then the disclosure will be applicable. And then there is a separate auditing standard, SA 240, which talks about auditor responsibility on fraud, which itself talks about detail what should be the auditor's overall responsibility in related to fraud. So anyways, the auditor will perform the financial statement audit. Both this particular clause requirement, CARO requirement, and SA 240 will get intersect with each other. And if auditor come across the fraud during the year, then the reporting will be applicable. How much to report, like in the sense giving the factual details, that depend upon the nature of the fraud and the information in possession of the auditor. Auditor can consider the materiality over here, because if it's a small amount, say 1,000 rupees, 50,000 rupees, so those kind of fraud, considering the overall size of the company, that may be ignored over here. The C part, the last subclause, is related to whether auditor has considered whistleblower complaint, if any, received during the year. So this is one of the questions put in the chat box at the beginning of the session. So SEBI, through like listing agreements or Companies Act, through that vigil mechanism, they define which all companies are required mandatory to have whistleblower policy. Your audit client falls under that category, so this clause gets applicable. And auditor need to consider the complaints received during the year. So mere taking a representation will not suffice. Auditor need to satisfy themselves, like where is the record being maintained of whistleblower. Generally, every company, they maintain a register in which any complaint through whistleblower is being written over there. Auditor need to take that register and go through the complaints. So that is the more appropriate way of doing this, like forming audit procedure, rather than mere taking a representation from the client. This is the carry forward clause related to related parties. So it talks about two aspects: whether the section 177 and 188 of Companies Act, whether those are complied or not, and then whether the disclosure requirement as per the accounting standard has been made by the company owner. So here also there is a separate auditing standard, SA 550, on related parties. Both need to be intersected, and auditor need to perform procedures surrounding this auditing standard and then this particular clause also.
So Nitin, there is a question by Neeraj Jindal.
Yes.
The question is, if a company holds considerably cash balance almost whole of the year and defaulted in repayment of its loans, whether it would be treated as a willful defaulter or not. So basically, willful defaulters are, the ones which have been officially declared as willful
Right.
defaulters. And also, you will need to take a representation from the company whether it is a willful defaulter or not. So it's a very tricky situation. I am understanding where from you are coming. The companies which are having, cash balance, cash in hand, a lot of that. But actually, you can ask a question when you are having so much of cash balance, how can you default on the payments? So probably you can raise a question on existence of the cash in hand, and you can actually look into your audit procedures related to auditing the cash balance. So this is a very tricky question, but it can actually hit your balance sheet. In your main audit report, this can come as a point, whether in your opinion, whether the balance sheet is showing true and fair picture or not.
Right.
Yeah.
And this aspect is being dealt in detail in guidance note. And the guidance note talks about that the willful defaulter is what the RBI or bank has been declared. It is not for the auditor or for the company to establish whether there is a willful default or not. Right. Now, where we are.
So, sir, how much time it will take to conclude the session? How much time it will take, Nitin ji?
5 more minutes, sir.
5 minutes, sir.
Yeah.
So in terms of internal audit, so there are two clauses, and this 2016 CARO was not having this particular internal auditor system. It was there in CARO, I think 2003, the earlier version, but not in CARO 2016. So the first subclause is related to whether the company has an internal audit system commensurate with the size and nature of its business. Right. So auditor need to comment on the nature and size of the internal audit system. It's more of a opinion-based requirement. So here comes the tricky. The Companies Act, it specifies which all companies are there on which internal audit is mandatory. It particularly covers the listed companies and some selective unlisted company based on their criteria of paid up capital and turnover. If your audit client on whom the internal audit is mandated as per the Companies Act, then obviously they should have internal audit system. Mere having an internal audit system and getting the internal audit done will not suffice this requirement. Auditor need to comment on the size and nature of the internal audit system, whether it is commensurate with the company's business or not. So what factor can be considered is nature of the company operation, scope and periodicity of the internal audit system, competency of internal auditor, which whether it is being done internally or through an external firm, competency.
So Nitin, this question was asked in the beginning also. So to simply answer, they will need to consider the internal audit report.
Right.
Yeah.
So
go to next.
This clause is whether the company has incurred cash loss in the financial year and in the immediate preceding financial year. This clause was there in the earlier CARO, and here one need to determine the cash loss. So one should start from the net profit as per P&L and add the non-cash items, and will come out with the cash profit or cash loss. If it's a cash loss, then the reporting will be there. The question comes, what if the cash loss is one of the year, like either in the current year or in the immediately preceding year, but not in both the years? So the guidance note suggests that the reporting will be there, even if it's there in one of the year. Then the next clause is related to the resignation by the stat auditor. It specifies that whether there has been a resignation of statutory auditor during the year, If yes, whether the incoming auditor has taken into consideration the issues, objection, concern raised by the outgoing auditor. So this clause is, first of all, it is applicable where the appointment is made during the year to fill a casual vacancy caused by the resignation. It is not
You
applicable.
can go to the next. Actually, this is clear. Yeah.
We are almost, and this is the last clause. In terms of the this is the requirement on consolidated audit report on the audit report on the consolidated financial statement. This we have discussed at the beginning.
Discussed in the beginning that in case of qualification of component auditor, that need to be considered by the consolidating auditor.
Right. So here, auditor need not require to repeat the qualification, the wordings. Their reporting requirement will be sufficient if they give a reference at which particular para of the CARO is being qualified. So that kind of table is being specified in the guidance note. So with this, basically we complete the entire clause by clause.
Thank you very much, Nitin ji. Can we stop screen sharing? Thank you very much, Parveen ji. Thank you very much, Nitin Gupta ji. I think Narendra Roja ji has already taken each and every query which was asked
No
by
problem.
the participants. So thank you very much, Narendra Roja ji. I think each and every query from the chat box also has been taken by Narendra Roja sir. We are having the presence of our past chairman of Central India Regional Council, my elder brother, CA SC Jain sir. So I welcome SC Jain sir on behalf of all our honorable participants. May I request Sanki Jha ji to please ask the query. Sanki Jha ji, please raise your query.
Anuj sir, all the queries we had taken during the presentation only, and we have addressed there and then.
No problem, no problem. No problem.
All right, already done, sir.
No problem. Some participants have raised the hands, so they want to ask the query individually. So I have requested to raise that query. Sanki ji, you want to ask any query? Ashok Shukla ji, Sipra Jain ji, Naveen Jain ji, if you want to ask the query, please unmute yourself and you can ask the query. May I request SC Jain sir to please say a few words on this occasion.
Namaskar.
Namaste sir. How are you?
Thank you, Anuj ji, Nitin ji, Parveen Kumar ji. A wonderful talk on the subject company law, CARO, which is really effectively discussed by the learned.
Yes sir, please start your video sir. Yeah.
Yes, sir. नमस्कार हो भाई.
हाँ नमस्ते सर.
नमस्कार जन साहब.
नमस्कार साहब. मुझे तो लग रहा है कि रोज जो है अनुज जी को जो है अब मिलना हो रहा है. इससे बड़ी खुशी की बात. और जो है आज का तो बड़ा डेलीगेशन, क्योंकि जो एक्चुअली में क्या है कि मैं तो इसलिए ज्वाइन करता हूँ, एक तो टाइमिंग बड़ा सूट करता है और दूसरा जो है कि सब्जेक्ट जो है बड़े करंट सब्जेक्ट है. जैसे कंपनी है, कारो है, अभी ऑडिट रिपोर्ट फाइनल हो रही है, तो जो फाइनल टच होते हैं वो डिस्कस करने के लिए आते हैं. मैं करूँ या मेरे ऑफिस का.
सर आवाज बंद हो गई आपकी.
सर यू आर ऑन म्यूट. जैन साहब यू आर ऑन.
नमस्कार. फिर जो है फिर मिलेंगे. क्या बात है, अनुज जी है हमारे, तो फिर मिलना ही मिलना है. फिर क्या, उनके संग तो कोई दिक्कत ही नहीं है, मिलना ही मिलना है. और आगे भी अच्छे टॉपिक से मिलते रहेंगे. और जो मुझे लगता है कि जो है मैंने वेबिनार के की हैं, लेकिन जितना ये टाइम डिवोट करते हैं फुल टाइम अटेंडेंस टू दी वेबिनार, और आज के टाइम में ये कोई आसान काम नहीं है. मतलब कोई भी आप किसी को भी ले लें, कोई इतना आसान काम नहीं है. चीफ गेस्ट आए, इंट्रोड्यूस किया, कर दिया, लेकिन फुल टाइम. और he is discussing meeting with each and every member. पूरा ला के बैठे हैं कि कौन है कौन नहीं है, और उसको पूरी लिस्ट से देख करके, और जो है पर्सनली जो देखना वो रियली ये आज की आदत नहीं है. आई नो फॉर लास्ट 20 years आज की नहीं है, शुरू से आदत है. इट इज़ वेरी नाइस कि ये जो है मिला, आपको मिला, और आपको मेरी बहुत बहुत शुभकामनाएं आगे के लिए भी। अभी
जैन
के
साहब,
लिए
हमने सिप्रा जैन से भी समझ लिया कि 80 जैन सर हैं।
अरे मैंने अपनी डॉटर इन लॉ के मोबाइल से लॉगिन किया था, और लेकिन जो है हमें अनुमानों में कि अनुज जी की आंखों से छिप नहीं सकता है कोई। तो चलिए, कोई नहीं, बहुत बढ़िया। तो
सर एक क्वेरी है,
Yes,
one query is of Abhinav Kumar ji, where physical verification of inventory is not done by the management as not possible in some cases. What remark is to be made by auditor?
So Anuj, we had discussed this issue while doing the presentation because of COVID scenario, lockdown था तो कई जगह physical verification नहीं हो पाया। ऑडिटर को जब भी पॉसिबल है फिजिकल वेरिफिकेशन करके रोल बैक करना होगा, ऑल्टरनेट ऑडिट प्रोसीजर्स करने होंगे, जिससे कि दे कैन फाइंड देयर कंफर्ट द नंबर व्हिच इज बीइंग शोन इन द बैलेंस शीट एज इन्वेंटरी, whether that is true and fair or not.
Yeah, and one query of Hardeep Arora ji, each provisional figures given to bank for any purpose can be useful to the auditors in relation to CARO.
So basically what we have spoken about is the quarterly statements or monthly statements, stock statements, debtor statements which are being given to the bank. The auditor will need to have a look and see whether they are in agreement with books of accounts or not. They are very critical now.
Yes, sir. So thank you very much, our honorable guest speaker Parveen Kumar sir, CA Nitin Gupta ji, for your wonderful delivery. Thank you SC Jain sir for your blessings. Thank you Shyam Agrawal ji and Narendra Oja ji for always being so active. So we have already exceeded the time limit by more than 33 minutes. So thank you very much all our honorable participants who are still live with us on Zoom platform also and on YouTube also. So over to Shyam Agrawal ji, Narendra Oja ji. Thank you very much.
Thank you Anuj ji. I welcome Shyam ji, little late, कोई बात नहीं, and Rakesh Shyam Agrawal ji, kindly say vote of thanks to all the participants.
Thank you Oja ji. First of all, good evening to everyone. Sorry for being late. Today's session was informative and it was wonderful deliberation. I would like to thank Parveen ji and Nitin Gupta ji. हम चाहे कितना ही पढ़ लें लेकिन उसकी बारीकियां हम नहीं समझ पाते। आज की जो बारीकियां उन्होंने समझाई, इनके लिए बहुत बहुत धन्यवाद। आई वुड लाइक टू थैंक श्री अनुज गोयल जी, जो आज के सेशन के चेयरमैन हैं। हम जो 2 महीने से सेमिनार कर रहे हैं, ये सब गोयल साहब जी के ही कारण सफल हो पाया है। वो हमारे जवाहर पार्क सीपी क्षेत्र के एक गॉड फादर हैं। आई अप्रिशिएट देयर डेडिकेशन कि वो 2 घंटे के सेशन में 2.5 घंटे हो जाएं, 3 घंटे हो जाएं, वो हिम्मत नहीं हारते और एक्टिवली पार्टिसिपेट करते रहते हैं। आई थैंक्स गोयल जी। आई आल्सो वुड लाइक टू थैंक जी कुणाल जी who arrange, manage all representation to for the session perfectly. He behind the scene, वो पर्दे के पीछे के हीरो हैं। I thanks कुणाल जी। I thanks our participants who joined the seminar, and made the session very interactive. I thanks Oja ji making this session successfully. Thanks all to all and good night to all.
Thank you.
अनुज जी आप म्यूट पे हैं सर। अनुज जी म्यूट हैं।
अनुज सर आप म्यूट हैं।
अनुज सर म्यूट।
Yeah, thank you sir. And I will request the admin to please send the PPT of Parveen sir and Nitin Gupta ji to each and every participant without fail. Please note it down. We will be getting the PPT through electronic mail or WhatsApp. So please ensure to send it to each and every participant without fail. So thank you very much, Parveen Kumar sir, Nitin Gupta ji, Shyam Agrawal ji, and SC Jain sir, and our participants from each and every part of the Delhi NCR and the Central Region and UP and Delhi. Thank you very much. A lot of members are appreciating the deliberation like anything. Ashish Parak sir, our very very senior member from Central Region, Vivek Kumar Goyal sir, and Monica Bajpayee ji, together with CARO clauses, there was analysis and audit procedures also. It is really very wonderful. Thank you, Monica ji. Then Rakesh Kumar Garg ji is also appreciating the deliberation. Vijay Jain ji, my very good friend, my elder brother from Meerut, is also appreciating the deliberation. Lot number of communication of the appreciation is coming. Seema Sharma ji is also appreciating, and lot number of members are requesting for the PPT. Parveen ji, can we get the PPT?
Yeah, we will send it tomorrow, sir.
Yeah, thank you very much. So you can WhatsApp or mail me.
Sure.
I will get it communicated to each and everyone. Then Sudesh Agrawal ji, if a company is holding heavy cash balance and is not making cash expenses, what are the disclosure requirements? The company is having so much physical cash as shown in its financial statements. Whether we have taken this?
We have answered this question.
Yeah. So I think most of the queries are already answered. Thank you very much, our honorable guest speaker Parveen Kumar ji, Nitin Gupta ji, Shyam Agrawal ji, and all our honorable respected audience present here from each and every part of the country over Zoom platform as well as YouTube. So please take care of yourself and your family members, and please get yourself vaccinated at the earliest. Thank you very much. Take very, very good care of yourself.
Thank you, sir.
Thank you.
Good night.
Thank you.
Thank you, Parveen sir. Thank you, Nitin ji. Thank you, Shyam ji.
Thank you.
Pleasure, sir.
Thank you, sir.